So around the region, we do have the Hang Seng in bear market territory. We've got the composite in bear market territory. So if you put things in perspective, because perspective is what we want, how is the Australian market performing in your view?
Look, I think the risks are rising. It is quite unusual for the Australian share market to see 8 consecutive days of losses, which we did see this month. In fact, we've only seen it 4 other times besides this year, since the year 2000. So I think it is a warning sign. We are going to see added volatility throughout the next couple of months. And look, I wouldn't see another shot at a run up for the Aussie share market, perhaps until the Santa rally towards the end of the year. So look, I do think it's going to be a couple of months of weakness for our market. And if we have a look at what happened on our market today, in the US overnight, the gains were really led by tech and energy. And while energy outperformed on our market, tech ended up being sold off. And that's quite interesting because it's going to be a big session for Apple with its launch of iPhone XS. So look, we're going to be watching the US once again. The other thing I'm watching is QBE insurance. We know that Hurricane Florence is due to make landfall, and that's going to be a major one to watch, given that QBE does have about 29% of its business over in the US. And last year was absolutely dismal. It had Hurricane Harvey, Irma, Maria, the wildfires in California, and then you had Cyclone Debbie here in Australia as well. So just watching to see whether we're going to be talking about QBE insurance over the next couple of sessions, although they do have a pretty strong reinsurance program in place.
Yeah, winners and losers out of any approaching storm. I mentioned the energy plays off the back of oil prices doing a lot for the local market today. And I will note, Julia, we did write it down in the newsroom that you're the first person to mention a Santa Claus rally so far this year. So we've already got that to look forward to. Julia, while we've got you, I'd like to go through some of the equity stories out there today. Look, there's not a lot of them, but we did get an update coming from Myer. It was pretty dismal by all accounts, but, you know, writing down some goodwill, talking about its debt covenants, you know, there were a number of sort of points in the release that could potentially, I mean, could this be as bad as it gets for Myer? Could it be upward from here?
Look, that will be the speculation, but I think the key here is sales, and sales are still down 3.2%, like-for-like sales down by 2.7%. And in terms of the actual result, it wasn't too bad. So net profit came in at $32.5 million, just under the consensus at $33 million. And earnings before interest and tax came in at $55.4 million, which is just under consensus at $57 million. So the results weren't too bad, and there were a lot of positives. We saw the covenant headroom that was negotiated, gross margin improvement in the second half. But I think investors are still asking themselves, well, sales are still declining, and where are the signs of a turnaround? And without signs of a turnaround in terms of sales, I don't think the market's going to be backing the stock. I did think the share price reaction was quite dramatic, given that, you know, the result was pretty much in line with expectations. But I think it is around what's happening in terms of sales, and still no real clear strategy, I think, to decline that falling sales number.